Hello everybody and welcome back to our special weekend edition talking about stocks, commodities and crypto markets for the week ahead. Well, as many of you know, we are in mass fear across the markets, and sometimes people say that's a time to be greedy and opportunity is just around the corner. The problem is we did close at a new low, and that usually means there's a little bit more pain to go ahead, and we've got some big data to of course back that up. We'll be talking about everything and more right now. Stay tuned, this is going to be a great one. Well, welcome back everybody to the channel where we talk about stocks, commodities and cryptos on the daily. If you like any of those markets, consider subscribing and of course smash that like button if you find value in today's video. Let's begin by talking about fear and greed, the two real elements of market conditions. When everyone's greedy, maybe you need to be starting to get fearful, yeah? And when everyone is fearful, maybe we need to start looking for potential buy zones in the future. So the fear greed index is showing 31. It's not even in extreme fear yet. We did tap it once, but we're only at about a 31. Now, many of you will be feeling more fearful, and we've got some big surveys and some big reports here to show that the actual fear is spreading through the markets, and that could be exactly what Wall Street's looking for, and we've got more to talk about that soon. In terms of the Friday decision and what happened on the actual market after the jobs numbers were released, it was pretty wild. So it initially went up, going through some resistance areas and taking liquidity. We'll talk about that soon later on in the video. And then it dumped straight back down almost about 2.5% before rallying to being positive, then dumping again, and then rallying into the end of the day. It was a bizarre day to say the least, and certainly quite difficult if you're a swing-based trader or even sometimes an investor. What you need to be thinking about is whenever the VIX is above 20, you really need to come down to being nimble and fast. That is day trading, scalping, and understanding that these markets will switch like this. And until you get a real buy actual signal, it's very, very difficult for you to be picking or calling the bottom of the market just yet. But we will be talking about defended zones that we believe are going to be coming up here for the stock market. Which sectors were doing best through the Friday? Mostly defensives, utilities, staples, and of course healthcare. And energy was out in front because oil broke out about 2 days before. And of course, that's led to rises in that particular sector. Everything else was down quite a lot, led by mostly risk assets. If we think about the week as a whole, it was interesting because of course we ended and started very, very similar area, slightly lower, but still very similar. Amazon was one of the biggest losers for the week, down 7.65%. It just continues its slide and it's about to move into 2020 highs. So we'll talk about that later. But most of these stocks basically started and ended fairly similarly for the week. And that's something that's important to note when we're talking about charts. Let's also talk about the fear in the markets and whether the idea is spread. So last week we reported on the idea that there was a very fearful market. 59.4% of people were bearish in the surveys. Only 16% of people were bullish and 24% was neutral. What was the instant market reaction to that? A little bit of a rally met by, of course, sell the rip demand. Now, coming into the Friday, this was done before the Friday happened. So before, of course, the jobs numbers were released. 52.9% of people were bearish, and suddenly we had a little bit more bullish tinge. So what did they do? They really scared everybody. And I would say as of the report ending, is in that day ending, we're probably back to around 60% bearish feeling in the market. Everyone's starting to get very negative. And as we know, this can be sometimes the time that things start to turn around. Here's another indicator really proving that point. Market and turmoil indicator. So the S&P 500 forward total returns following the CNBC markets and turmoil specials. So remember, when the news gets hold of an idea and everyone's suddenly talking about it, that's when you want to start being opportunistic. You need to start saying, well, wait a second, everyone thinks this total thing is ended. Has anything changed? You've got to ask yourself the positives and negatives for the economy. And right now, it looks like negative, 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 and almost no positives. Of course, it's difficult to see them when we're constantly being thrown all these negatives. But the stats don't lie. Since 2010, whenever these things have aired, generally speaking, the market has turned around soon after those and, of course, done quite well. Now, the stats would back this up because we already talked about the idea that if we had 4 weekly closes on the S&P 500 down, that is consecutively down, we're entering into a rare category. And that rare category is Basically, that the market does usually continue and it can form what we call capitulation. So one big sell-off that scares everybody so much and then it rallies off that area. So in general, the average is around 6 weeks down. We're entering in, of course, week 5 here. And the average for the return down from the top to bottom of that move was about 12%. So let's now have a look at the next update here, which is what happens next. Well, funnily enough, it actually says that the average after that happens, after the 4 weeks down, is another 7.54% down drop. So that's pretty significant for the S&P 500. I'm sure many of you don't want to hear that. Some of you probably do. But this would take us to a historically very important area in the S&P 500, which we'll look at later. So yeah, the stats are kind of pointing towards more down to come and potentially a little bit of a brutal sell-off, maybe a really brutal one that could cause capitulation. Another thing we need to be aware of before saying that we're going to all-time highs on markets is that over the last 50 years, whenever we've seen a 50 basis point raise, which is quite rare for the Fed to do, we have very choppy markets for the next 3 months, 6 months, and 12 months. So expect 2022 to be continuously choppy, expect it to be a trader's market. And then I think 2023 is potentially where we might see some recovery and better markets if we do end up turning around and things don't get worse than they are currently. Bear markets without a recession are, of course, rare, so there will be some defended zones from Wall Street. You'll hear me bring up defended zones a lot because it's really a big concept that you need to think about. There are areas where the algorithms will defend or they will stop hunt zones, and we need to be aware of that in markets. And when we can see them, it makes it easier for us to understand maximum pain concepts. That is, where is the max pain in these markets? If we're thinking about S&P 500, a technical bear market is when the market goes under 20%. That hasn't happened yet. Obviously in the NASDAQ it has, but it hasn't happened on the most important market, the S&P 500. You don't take your big technicals from the NASDAQ, you always go to the S&P and make sure you check it there. Earnings season beat rate, 73% beats, 1,112, and misses 415. So really it's not about earnings so much, it's more about forward guidance. And the street is very concerned about the GDP. Obviously, they're concerned about recession. Are we already in one? Well, we'll soon find out. Obviously, a lot of people out there believe we are. And in the comments down below, I'd be interested to see what the community says here. Are we in a recession already, guys? Put it in the comments down below. Yes or no? I'm going to guess with a lot of people are going to say yes, but we'll find out very, very soon. In terms of earnings, if you have any of these stocks, please be aware they're coming out. There's no real huge stocks here compared to what we've seen in recent weeks, but they are there. But let's get into the technical analysis because this is where things get super interesting. We'll start off with the fear index. Fear actually dropped here on the Friday session after rising through, of course, that really crazy start where we dropped 2.5% on some markets after the jobs numbers. Whenever we hit 35, usually this means that the spread of fear and panic has been found and the market will often rally off that point. Now, if we breach 35 this week and we go above that and close, I think that we're in for a bit of capitulation in these markets. That is, the markets will drop heavily and they'll be incredibly brutal. So be aware of the 35 plus break on the VIX. We'll be watching that together. The US 10-year rising 3.136. That's huge. That's going towards those 2018 highs. Now, I'm here to tell you first that I think over the next 1 to 2 months, the 10-year is going to turn around. And I know you might be thinking, well, it certainly doesn't show me that on the technicals right now. I have some lead indicators and they're starting to lead towards the switch of the 10-year. And that's going to be positive towards markets. So just remember, if we start to see it turn around, I do believe it's probably real. I'll keep updating everyone in the community. Make sure to subscribe because I will keep updating you on that. The 10-year is such an important indicator to markets' health. And if it turns around, what that's really saying is that possibly the inflation that we're all currently believing is there, and obviously it is, might be dropping. I think a lot of it will come in, obviously, with this core number this week. But at this stage, my goodness, 3.136, very high, really putting a battering on anything that is risk and anything that doesn't earn money at this stage, any of those PS ratio stocks. Another thing that's happening is the spread of fear is really becoming apparent in the PCC, the put call ratio. So many puts being opened in comparison to calls. And the more this idea spreads and the more puts that go into the market, the more it reminds me of late in or middle of March before that kind of big turnaround event occurred. If everybody's fearful, the market tends to do rip rallies, and I think we need to be very aware of that coming over the next couple of weeks. Let's talk about gold. Many people see gold as a big inflation hedge. I'm not really thinking it's that because it doesn't tend to have that correlation. But what it does do well in is stagflation. So if you believe we're in stagflation, the gold could be the asset of choice. Now we've got resistance here around 1910. It's a big deal. Basically, so far we've snapped a little bit of short downtrend. We've obviously come up and we've tested this area 3 times. We've got big rejection off here. So I think a closure above 1910 would be fairly significant and would show that the bulls are back in town. But we can actually back that with a few other things in just a few moments. Let's talk about oil. So we've mentioned that oil has been bullish now since here. So since about 107, it's now trading at 110 and we've got a big resistance at just above that 111. We mentioned before that there's big news coming this week. OPEC is one of them, and that's coming on Wednesday. Now, for anyone that doesn't know, OPEC pretty much are the cartel that really controls oil price. So if they want it to go down, they will. And sometimes it does meet their best interests, sometimes it doesn't. So here we've got a big area. We can see here this 111. Resistance, resistance, resistance. It's currently defended. So if the market breaches through and doesn't instantly breach back down, that is, it was basically a stop hunt, I expect oil to really start to rally. So if you're buying this and you're buying it through this level, just be careful of the next couple of candles. You really don't want it to do this, because when it does that, it could have literally false broken you out. So this level here is super important. Series of higher lows. At this stage, it looks like it's trying to go long, but a breach underneath this trend line also is going to be short for oil. So we remain basically positive on that from the last couple of days. Let's move over to DXY. Now, as we know, money has been, and we've been reporting here, money has been going into cash. There's no doubt the DXY is super strong and it is absolutely, going ballistic. If we put this on a weekly, you can see why. Here's the resistance, here's the resistance, here's the resistance. And are we in some kind of distribution at this stage? That's a question we want to ask ourselves. So if we look at something like an 8-hour chart here on the DXY, and it doesn't really matter which one, what you'll notice is that there's a few signs that this could be starting to weaken. The first one towards the bull side was obviously that the market went underneath these lows and then it rallied straight up. This is also a max pain. Basically, the market false shorted itself earlier in the week and then it's rallied straight back up. It's hit the resistance, looked like it's going to short off, and then it's taken out that and then instantly rejected. Remember what we're talking about in oil. So there's kind of like a max pain on both sides here. This is a trap, this is a trap, and right now we're stuck in distribution. If the market starts to turn around and it makes a new low past this point, you've got to say at that point, cash is going out. And where is it probably going? It's probably going into potential risky assets or risk assets. So maybe risk on is coming back into the market. A huge thing here, the DXY, we need to watch that and see what the big players are doing. And I think the spread of this idea, that is the rally, everyone sees the dollar index. Everyone's saying cash is king. So there might be one more rally in it. Obviously a new high broken through here. I would expect it to probably go quite bullish. But at this stage, it is looking slightly weaker and it's already starting to put those signs in that it might start to tip over. So be careful here on the DXY. Lots of trapping going on in that particular pair, which is common for it. Let's look at Tesla. Speaking of traps, very similar. Big kind of rallied down, rallied up. We talked about this one here. We hoped it would go to the 977 previous support. Didn't quite get there and it reversed. If you bought the right areas though, you shouldn't have really lost on this type of trade. And you should have at least had a break even or something in if you were day trading it. And right now, Tesla becomes fairly difficult. If it breaches underneath this level here and closes, that is underneath around that kind of 850 zone, you'd think the next stop is 800 or 770. So at this stage, it's more about the NASDAQ and what happens on that, because if the NASDAQ starts dropping, expect Tesla obviously to come with it very hard. And you'll look at NASDAQ supports as the big key indicator for this. Speaking of NASDAQ, let's look at Apple, the biggest stock in the world. Trend line here being put under pressure again. It's currently in a huge potential accumulation. We don't know what it is yet because we haven't seen a breach out, but we have a trend line. If we breach underneath that, we go into the next trend line, and that trend line goes all the way back to 2020. So there's a big kahuna right here. 20 September, blah, 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 goes through all these areas, and that break would be incredibly significant. I think it could bring us back down to like a 140 on Apple, and it would be consistent with a big capitulation sell-off. So we're on support here for this stock. We're also on support for Microsoft, obviously another incredibly important stock. Support, currently support. What happens if we breach this? I think the word is bad. And if that occurs, I believe the markets are going to short off. It's currently just nicely trying to find its base, and it looks like it's trying to, but at this stage, we're looking for that breakdown to push markets into effectively capitulation or mass fear. Amazon's already in mass fear. It just continues to slide here. It's already going back towards those February of 2020 highs, which means that it's wiped off everything that it put on during the pandemic. And that's a big deal for, of course, something like Amazon. It could go even as low as 2050, 2000, because that's previous resistance for all those years that it was stuck in. So this obviously is a bit of a Wyckoff confirm. At this stage, it looks more negative, and it's very much you're just trying to catch the falling knife here on Amazon, not looking good on the close. XLK, this is the tech sector. Another one. Why we say we need to watch Microsoft and Apple is because if they falter, which they haven't really faltered anywhere near as much as other stocks, things are going to get bad. This is a long leg doji on the Friday. Look at this, the high, the low, open, close, sitting on the support. What happens if we get a close confirmation? I believe we continue to short. And at that point, we could be going into as low as a 132 reading here for XLK. And to put that in perspective of percentage, we're looking at around 6% further down. Not so good here for the tech sector, and something we will be looking at. Another one is looking at different markets around the world. So obviously we've got here the XJO. This is the Australian market. And I just want to show everybody that this is held up amazingly well in considering where the US markets are. So has the FTSE, and so have certain markets in the world. And I think it'll be an eye-opener for many out there. So we have here the resistances. We've obviously got a shooting star here. It's sold off to the 7200, which is a defended zone. And if we breach underneath here, where do we go? Probably around that 6,900 zone, which again should be relatively defended. Now you might ask yourself the question, how is this going so well when the US is going so poorly? It's because it's only made up of three markets. Basically, it is oil or energy, it is metals or mining, and it is banks that lend to those two. And once you understand that that's what really this sector is, then you can kind of see why it might be doing all right. It's an inflation-based economy. Basically, if inflation exists, it does really well. And I just want to just show you why that's true. If we go back to the weekly, take a look at the run from 2003 all the way to 2007. Look at this run. Obviously, raising of rates and a huge boom in metals and mining and commodities. And that's what happened. But, you know, when those booms and those huge bubbles blow off, you get like a lost decade, which is no returns for a long time. So just remember, index investing is great, but sometimes it doesn't work if that was a bad sector. That's why we like the US. It's quite well distributed. It isn't all anything, although it did become a little bit too heavy in tech, and that's kind of rebalancing at this stage. The downward trend here on the DAX, still incredibly intact. This is going to be a huge bull indicator, I believe, in the future. And what I mean by that is if we breach this downward trend line, that's going to be huge. Do you know how many people are going to try to sell this next time around? There's going to be a huge amount. So a good trap would be to push them through. So DAX going lower, finishes on support. New low obviously could trigger some serious capitulation selling. Watch that. It's worthwhile checking out. Speaking of capitulation, IWM, the Russell 2000, it just looks brutal. New low, absolutely horror show here on the IWM. We've been talking about it, looking weak for a while. Each rally has been met by sell demand. It just looks really bad. And the 200 could be the next level, or even the pre-pandemic highs, which is a huge role reversal. So if the market keeps coming down, 172 or even a 175 is kind of in the books here. And that would push us down from here around another 6 to 7%. So what you'll notice is that we're finding these huge supports around 5 to 6% lower, both on XLK, IWM, and we're soon to find them on the NASDAQ and S&P 500. So let's move over to the NASDAQ. Another really horrible week. I mean, this is so many weeks in advance shorting. We've made a new low. The spread of fear is pretty high. Obviously, what would the market like to do next? Potentially, they would like to get even more puts in the market. So I could see that the Nasdaq falls further, and we've done a quick fib here of the run since the pandemic. Huge run. 50% fib sits just underneath 12,000. Now, is 12,000 a huge psychological number? Absolutely. Anywhere in this box zone is going to be defended. So you've got to basically think that there's a defense coming up in the market somewhere around here. So in this area, and that's a 400 point range. I know it looks crazy when you think about it. We expect something like this to occur. Double bottom, lightning bolt, any of those types of things. And when it comes into this zone, I think there will be Wall Street players defending and trying to buy that area. I'd be surprised if it isn't defended. Let's move over to the S&P 500. Now, this is where things get really interesting. They have already defended one zone. Previous supports formed May 21. So we've basically taken off all that time. We've rejected it, and we rejected it again on the Friday session. Now we know where the resistance is. It's 4,300. No question. That's a hugely defended spot. If this breaches, big deal. Obviously risk back on. 4,300, keep it in the back of your mind. It's a huge level to watch in the future. But if we breach underneath here, that is a little bit of a long leg doji, and we get underneath, where's the next area? Well, 4,000 is a huge psych number, but I'm not too sure if that's going to hold based on the fact that we'd be so close to it. So all I could see there is like a 4,000 would need to be like, bam, straight back in to this range. And then that could be max pain. So that would be a theoretical scenario. Or the more likely one is a potential down to 3,850, 3,800. And the reason why that would occur is because think about a technical bear market. We mentioned it before, about 20% down. A 38.2 fib from the top to the bottom, that is from the bottom of the pandemic all the way to the top, puts us at around 3,800. So many people believe that. Now, a lot of other people believe we've just done a head and shoulders, and they take the neckline here and they say, okay, well, we should be already shorting hard, and this is the move here. If you take that distance, it becomes 3,800. So there's a lot of reasons going towards 3,800. It was our previous range here that we were taking a look at before we got those bounces, and we knew that at this point we were going to do a bit of a rip rally. At this point, if we breach underneath, is this the final move for the market? I would expect fear to be massive, and more importantly, we would see puts everywhere. And let's discuss that 380 zone. Notice what's here for the week ahead. 380, there's puts everywhere, guys, on that level. There's also tons of puts on 405 and 410. And what did they manage to do? It's amazing how the market's good at extracting calls. Look how many calls suddenly are going to expire around that 435, 440 area. It's amazing. Look at that. Look, so many calls sitting at the strikes this week. So obviously a lot of people went bullish on calls. I guess the market's like doing really, really great there. And then we've got a bunch of puts here and some puts here. If the market comes down, the idea is that these should rise. And the higher these get, the more likely we are to bounce and see that actual real rally. So be careful here, guys. This is going to be a massive week, and I definitely suggest following the channel because we'll be covering all of it together. Now, as we, at the time of this recording, we're seeing Bitcoin putting some serious lows in. So basically, it's coming back down to this 34,500 area. It looks horrible. And if this is anything to precursor off, it's kind of pointing towards a sell on Monday in the markets. We don't know that's going to happen, but obviously this is looking pretty bad. And if you believe Bitcoin precursors, I don't really, but if you do, it's looking pretty bad. So here's our max pain concept. Obviously, we've had a huge distribution. We're coming in hot down to this level. In my experience, that looks pretty bad, and it usually leads to further selling commitment. So if we breach underneath here, we might rally a little bit, but if we breach underneath here, I'm not even sure if these supports will hold. And at this point, I think Bitcoin is really looking bad. And one of the things you're going to be looking towards that is Bitcoin shorts, which reversed. So remember, it sold off a bit here, looked like it was going positive. Then the numbers came out and Wall Street started ripping down. And at that point, shorters of Bitcoin came in hard. That is, the whales started to really dump this market very heavily, and they pushed it super far down. So the more this goes up, the more likely Bitcoin is is to have a mass capitulation trade on it. So I'm not sure if that support that we see right now is worthwhile buying. It's too risky. You're catching the falling knife. And at this point, you need to see more before you try to buy those types of levels, at least in my opinion. Obviously, you guys do whatever you want. Let's move over to the Twitters and everything. If you haven't already, follow us on @FXEvolution on Twitter. We do post things there. And join us in the Discord community. There's plenty of traders in there sharing great concepts, sharing great ideas. And we've got one of the best trading communities on the internet. So make sure you come and join us in the Discord community. And just remember as well, in terms of information for the week ahead, we have some big ones. If you're trading oil, you need to be aware of the OPEC meeting on Wednesday all day. That'll be a big day of trade. And then, of course, we've got the core CPI numbers coming out 8:30 a.m. New York time. That's followed back to back by PPI 8:30 a.m. And usually I don't care too much about these numbers, but in this current market, everything counts. So the core number will be massive. We know that these things are out here. What I want to leave you with all right now is the spread of fear is becoming pretty extreme. If we see, the more we sell off this week, and especially if we hit some of those defended zones, if that does occur, the more I become convinced that we're going to have a big rip rally. And remember, if you go and look at the charts during the GFC, during any of those times, the point of the tech sell-off, that when we have these types of giant 4-5 week sell-offs in a row, there tends to be a massive rip. So just keep that in the back of your mind. Obviously, be careful out there, guys. Be nimble and fast in the markets and look for the next opportunity. Thanks so much. Please subscribe if you like the content and smash that like button. Bye for now.